Hi, this is Daniel with Unrivaled Investing. Today we're going to talk about Square. I'm just going to cut right to the chase. A lot of YouTubers like to beat around the bush, get you to watch longer. Let me just cut right to it. I think Square is an exceptional company. I think they can grow the underlying business by 5 to 10x easily in the years or decades ahead. It's a really interesting company for you to learn about, and if you're interested in learning more about it, stay tuned. So before digging in to what Square does, I personally have a little history. I bought about $3,000 worth of stock. It's a teaser position for me back in November last year. Since then, the stock's up about 150% in less than a year. So if you're interested in finding multi-baggers or companies like Square that can go up hundreds or even thousands of percent over time, hit that subscribe button or hit that like button. And if you're interested in following what I'm personally buying or selling in any given month, what are my top holdings, what am I doing in my personal portfolio, go to unrivaledinvesting.com, click on Journey. So the goals of this video is to provide an introduction to Square. What do they do? Do they have an unrivaled value proposition? UVP, or an unrivaled value proposition, that's the framework I look at all potential multi-baggers, because in order for you to grow exceptionally well, you need to be unrivaled. You need to have a good or a service that others simply don't have. And so that's a key filter. It removes about 95% of the investment universe, but I believe that is the secret to literally trillions of dollars of wealth creation in the stock market. What's Square's market potential long-term? And then lastly, thoughts on valuation, risk, reward. Do they have a 10x potential from here from a shareholder perspective? I think it's possible that they grow their operations by 5 to 10x. Will investors see that benefit as well? Because you always have valuation as a component as well. Let's dig in. So what does Square do? Square has two distinct businesses. The first is their seller ecosystem. The second is the Cash App. The seller ecosystem helps merchants. This Cash App helps individuals. They each monetize in very different ways, different services, yet they complement each other. Let's dig into the seller ecosystem. So the seller ecosystem started off at a point of sale system. It's really evolved significantly over time, where now they sell vertical specific software, for example, for retail shops, for restaurants. They have unique offerings, really trying to help solve particular pain points for individual merchants that are using the seller system. In short, the seller system, Square's seller system, enables merchants to sell goods, to accept a credit card, either in person, in your store, or online. But then they also refine it, where they have things like employee tracking and reporting, which is team management, a baloney phrase. They also have marketing services as well as loyalty services. So that way, hey, if you're a frozen yogurt shop and you want to give away the 10th yogurt for free, that's part of the tools that they have. So it's grown significantly beyond what they started off with, which was the point of sales. You see financial services on the side. That's like access to funds, where instant deposit means you may have received business from a customer today. Usually it takes a couple of business days for those funds to process for you to receive it. But you're a small business. You might need those funds today. Square can make that happen. So they've grown, they've evolved from just a simple point of sale business where they're helping merchants take credit cards to offering all these additional services, financing, payroll, software. Let's keep digging in. So they've evolved. You can see how they're making money. Like, how does Square generate revenue? So a lot of it's transaction-based, where it's based on the business that the merchant's doing and them getting about a 1% cut net of whatever business goes through. So if $100 goes through a merchant, they get net about 1%. And then they also have these subscription services, for example, like having software where they might charge $20 a month for that team management, or really clocking in, clocking out, time management for your employees. And maybe that scales up, where if you have a couple of employees, it's only $20 a month. But if you have 20 or 10 plus employees, it's $50 a month. So they have all these different types of revenue sources. One is transaction-based, the other is subscription and services that's tied to all these different things. They also have a really interesting business development in their capital side. I wouldn't focus too much on the hardware side, because the hardware is a way to get your foot through the door. The reality is anyone can create hardware, or a lot of companies compete on the hardware side. But where you start really creating a lot of value and margins is when you have these additional value services. Margins is profit, and so that's really the key here. So hardware is the very bottom. I'd focus on all these other components. So the reason why Square Capital is super important, and keep in mind, this is disrupting the whole financial universe as we know it, is because they have a holistic view of the seller through real-time payments and behavioral data. Juxtapose this with the largest banks out there that provide loans to small merchants, maybe, and it's based on delayed data. Here it is, Square has real-time data. They know if a merchant is a good credit. They can provide that loan then and there. There isn't piles and piles of paperwork that takes months to process with a major bank. This is a revolution in banking where they can provide the funds that small businesses need when they need it. This is going to be a critical change, and you're seeing it in their growth on their finance side. It's also critical because they have a better system for collecting funds than what Wells Fargo does or what any of the top banks do, because the traditional model is that you amortize the loan over a set number of periods. This is way better. Your starting point in the payment hierarchy, you're the first position. So in other words, the next dollar of revenue that a merchant generates, it goes to paying off that loan. It's a game changer in terms of finance. This is the future of banking. It's going to disrupt the field. And also keep in mind, those best merchants that are growing, who do you think is going to be the first to see it? Do you think it's going to be one of the top banks, or do you think it's going to be a Square? Square is going to see not only the smallest businesses that are growing faster, but they're going to be able to underwrite those investments, those loans, faster than anyone else. This is really compelling, incredibly interesting. Here's a case study of the value proposition that Square is bringing to the merchants with Brother and Sister's Flower Shop in Oakland, California. This is a real true story. We always had a website where our customers could order online, but at the beginning of Shelter-in-Place, we simplified the ordering options and switched from a direct platform to Square for our online store. When florists and nurseries were allowed to open to the public, it made more sense to us for the safety of our customers and staff to open only private shopping experiences. So a couple of data points here. They switched platforms to Square. That means they're taking market share. Good to hear. Then they talk about Square appointments has been easy to use for our customers and for us to keep track of shopping appointments. It has been very convenient to have all of these services on one platform. There's a critical aspect to this. There are multiple tools being used. The point of sales, the Square appointments, the online store, all linking together to create a seamless experience. That is an ecosystem that reinforces their value proposition. Looking into the demographics of or the details behind the seller ecosystem, you see that it's primarily these small merchants. A lot of it's going to be the sole proprietorships, where it's doing under 500,000 in GPV, gross processing volume. It's small, but it's very diversified. Is there risk? And obviously, when you're dealing with smaller companies, it makes you wonder: is there a lot of upside? Because you're going to be having more churn. A lot of these companies go out of business every year. Is there still significant market potential? The short answer is, heck yeah, there's a lot of potential. They talk about the seller ecosystem being $85 billion opportunity. One part is the transaction profit. Keep in mind, that's $85 billion annual revenue opportunity, where the first piece is the $39 billion, which is them getting that 1% cut on the business that goes through the merchants. The next part is software. That's them upselling additional tools to those merchants, like time tracking or retail solutions or restaurant solutions, where they're paying a monthly fixed fee. That's a software solutions, particularly for the vertical that this merchant is in. Next is Square Capital. We just talked about that, where it's making these expansion loans. That could be a $12 billion annual revenue opportunity. Next is the last one is financial services. That's what I talked about earlier, where what if a business needs the money today? Are they willing to pay a little to get those funds today versus having to wait a few days to processing? So it's effectively financial services, effectively factoring, for those that know, where these are huge growth engines for Square, multiple growth engines, huge opportunity. And keep in mind, you're only talking about a couple $2 billion in revenue currently for seller ecosystem. So this seems like a lot of potential, but that's not all. There's more. They're also saying longer term, they're going to be tapping into new markets, new products, upselling. When you're looking at $100 billion and a couple $1 billion in sales, that means that they could easily double, triple, quadruple in size just on their base operations. That doesn't mean that you as a shareholder will see all that, because valuation oftentimes bakes a lot of this in. But it does suggest that they have a clear pathway for a lot of growth. They're tapping into a big market. So now you really have to ask yourself, do they have an unrivaled value proposition? So while enabling commerce is a very rivaled space, there's a lot of companies that want to enable merchants to do business. Square is establishing an ecosystem of products that, when combined, appear to have an unrivaled value proposition. For example, like the Ogden Raptors, which is a baseball team, uses Square point of sale, online store, photo studio, order manager, payroll, Square stand, register, terminal hardware, all these solutions in one. There's a tutu school, which is a children's ballet, where they're using invoices to make their business easier. You got the T-shirt lady and son, which is a business in Atlanta, Georgia. They're using point of sale, invoices, Square Card, Square API to process online payments through WooCommerce, which is another platform that's enabling e-commerce. Additionally, she uses Shopinventory, SumAll, and Intuit QuickBooks. So 3 other outside apps that are through the Square app marketplace. It's incredibly interesting how Square is getting in the thick of it, linking up with all these companies to make it possible, and also having a bunch of different solutions for the merchants. That means they're getting deeply integrated in these merchants. It results in increased stickiness, increased value proposition. The big takeaway is when you see a company that's constantly innovating, they've gone from point of sale to offering all these other goods. It means you're potentially on a great ride ahead. That's what you want to see. You want to see a management that's constantly innovating. So one quick check of whether or not they have an unrivaled value proposition is testing growth relative to the market. So for the past 6 quarters, this is from the second quarter conference call, they said for the past 6 quarters, our online channel GPV, that's gross processing value, has sustained similar levels of growth of over 50%. So they've seen over 50% growth on their online seller ecosystem of over 50% for the past year and a half. So I know that e-commerce isn't growing at 50% a year. It's probably somewhere between 15 and 20% a year, maybe a little bit more. So for them to be posting 50% plus suggests that for their online component, they're really crushing it. They're growing. They are taking share. That furthers the case that they have an unrivaled value proposition. Let's size up the rest of the company as well. So looking beyond the seller's ecosystem, you can see the total percentage revenue. Cash App Bitcoin is 45%. It's growing crazy fast at 600%. 600% year over year. This is from the second quarter results. The Cash App, not Bitcoin, is only 17%, and the remaining 40% is the seller ecosystem that we just talked about. So the reason why I wouldn't spend too much time focusing on the Bitcoin aspect is it's primarily used to enable folks on the Cash App to buy or sell Bitcoin. There's a lot of trading. Honestly, Bitcoin hasn't really built out a developed ecosystem, so there's more speculation than anything else. And because that they're enabling, Bitcoin trading, it's not really resulting in a lot of gross margin. They're just enabling the trade, taking a very slim margin, like a 2% gross margin. Whereas, if you see the underlying growth of the business, it's really being driven by the seller's business, which has about a 44% gross margin, and the non-Bitcoin Cash App, which has over 80% gross margins. And you see that it's just growing exponentially the last few years, where their gross profit has compounded at 40% CAGR for the last 5 years. So what does the Cash App do? Not focusing on Bitcoin, which is only like a 2% margin. The Cash App is the #1 finance app in the US for person-to-peer or peer-to-peer, cash transfers. You can see some of the tweets. I love the fact that they're posting tweets when that's another company that Jack Dorsey founded. We're here, understand at Cash App offering direct deposit due to having an account routing number is a key step in establishing financial equity. Having a bank account in a traditional bank is a privilege. This person is absolutely right. The Cash App is addressing a significant market opportunity for those that are underbanked. It's really super interesting here because you have a lot of folks that may have bad credit and they were never able to open up a bank account. And what are they supposed to do with that check that they get for working their hourly job? Well, a lot of them turn to payday lenders to be able to get the cash that they need for living day to day. This is solving that problem with the Cash App. And, you see other positive feedback where, y'all helped me buy my first stock. Y'all so cool. I started buying daily Bitcoin. So what's interesting about the Cash App is it's enabling. And I tried out, I downloaded the Cash App yesterday just to give it a try. It took me 10 minutes to get that routing number and account. And plus they're sending a debit card in the mail that can be used anywhere that Visa is accepted. That's exceptional. The quick ability to be able to get an account. I mean, this is enabling the American dream for literally millions of underbanked folks in the United States. There's also, so you have, there's several aspects to this. Now you can buy stocks for free. The commission, no commission. So this is effectively like a Robinhood app on steroids. You're getting your own cash debit card. You can buy Bitcoin. There's direct deposit as well, which is similar to what we saw on the seller side with the financial transfers, where if you need to get those funds today and you can't wait a few days to get it, they'll put you up. It'll cost a little, but you'll get the funds that day if you need it. There's also Boost, which is if you're using your direct debit, they have certain programs. Square has coordinated certain programs where you can get discounts with select merchants up to there's a social dynamic where it's like, hey, you only have a couple hours to have this discount, but it can be like 10% off McDonald's or 10% off of Postmates or something like that. So this is super interesting what they're doing in the Cash App. How do they make money from it? One is the instant deposit aspect where you need the funds right now and you're willing to take a haircut. Another aspect is when you use your credit card, there's going to be a 3% fee. The margins on that are obviously lower. If you need an ATM withdrawal and you have to work from another ATM system because Cash App doesn't have an ATM system. There's also interest income. If we go into an environment with higher interest rates, having a bunch of people deposit funds in an app, that's going to be a net positive for the Cash App. So let's dig in to get a little bit more detail. So the instant cash out cost is about 1% to 1.5%. This is a game changer. This is not predatory lending anymore. This is tapping into the underbanked and providing capital at a relatively small cost. The send from credit card is 3%. That makes sense because credit card transactions or costs are about 3%. This is incredibly interesting. Plus, recent article from TechCrunch showing that the Cash App is testing a new feature to allow borrowing of up to $200. So you're talking about microloans for the underbanked. They are going to kill the loan shark business because why would you possibly go and see Vinny and potentially have your knees broken because you didn't pay your $200 back in time when you can have Square? They know you're a good credit and they pay you when you need it and they can see when you're getting your funds. I mean, this is a revolution for finance, what they're doing. It's really interesting. So how do you check to see if the Cash App has an unrivaled value proposition? The first thing you can do is just see the App Store rankings where they're beating Venmo, PayPal, Zelle. Another way is to check the bank deposits. Is cash coming in? If cash is coming in way faster than the underlying ecosystem, which is broader bank system, that means they're winning. And you can see here from the second quarter, these customers pull more funds into the Cash App, store higher balances, adopt more products, they spend more, all of which obviously drives monetization and lifetime value. We see that strong correlation with funds pulled into Cash App and with revenue. Makes sense. More people that put money into the Cash App, the more they're going to do things like either instant deposit or they're going to be using boosts or maybe Square gets some sort of cutback. And we also see in the second quarter that stored funds in the Cash App were over 1.7 billion, up 86% quarter over quarter here. 86% quarter over quarter strongly suggests that they're taking share, that they have a strong value proposition, that they are winning right now in the marketplace. Another interesting development for you to think about is that they have a win-win-win relationship here with the merchants that are using the Cash App for promotion, this boost where you can get like a 10% discount, because the customers using the Cash App are using debit cards, which are cheaper than using credit cards, which can cost like 3% for a merchant. And keep in mind, these merchants, they might only be making 10, 20% net operating profit. So if you cut out 3% cost because you're using a debit card versus a credit card, that's a big difference. That's a huge change in operating margin. So they might be willing to offer more promotions. And that's why you're seeing like McDonald's offer this 10% discount. But it creates this beautiful flywheel because then these merchants offer more boosts. It gets more customers, more people using the Cash App, excited to use it. So it further accelerates growth. They put more money in their account. This is a really exciting story. You're seeing a revolution in banking as we know it. So the summary so far is, does the seller ecosystem have an unrivaled value proposition? Yes, I think so. Does the Cash App have an unrivaled value proposition? Sure seems like it. Just based on the market share for both seller and Cash App, sure seems like it. Do they have a huge opportunity? Yes, I think so. I think they have multiple huge opportunities, and it's definitely a 10x potential over time just on their base operations. Now, what does this mean for the future? First, it means huge disruption in the banking sector. If you own Wells Fargo, Bank of America, Citigroup, if you own any of those major banks that are trading in the low teens and you think, hey, I'm getting a great value investment, I would have a good counter thesis in your mind for why they're going to be able to fight this off. This is a really tough question because right now, Square is going to see the best merchants that are growing quickly. They're going to be the ones providing the loans. They're going to see the underbanked folks that are developing, raising themselves by the bootstraps, that are ready to become a good credit and get loans. Square is revolutionizing the finance space with what they're doing. It's really interesting. But what about potential returns for shareholders? I tried to pencil out a bunch of different scenarios here. My value proposition to you, and I'm trying to enhance what I offer to you beyond just having a video, is that I'm going to download this sheet in the description of the YouTube channel in this video, so that if you want to play around with the assumptions, you think I'm way off on the margins or you think I'm way off on the growth rates, you can log in and you can play around with it. That way, you don't say, oh, I don't agree with how you're valuing it. You can change it yourself. It's however you want to do it. There's a sheet there that I'm sharing with you. You just have to download and you can play with it. It's in the description of this video. So in order to value Square, you really need to break it off into two parts. One is the Cash App, which we already talked about. I'm excluding Bitcoin just because it's lower margin. You can assume that's just a cherry on top of the ice cream sundae. But what's amazing here is you just get incredible range of valuation, 30 billion to 200 billion plus. And the reason why is it's hard to tell, one, what are their margins going to be? I mean, currently it's over 80% gross margin because, the cost of getting that instant transfer is really low cost of sales for them. And they're going to be growing in more and more services that are high margin. So, I'm throwing a 30 to 50% operating margin for Cash App. You can see how I'm throwing a 20% tax rate, assuming some sort of annualized growth. This Cash App is growing at like 130% in 2020. So assuming somewhere between 40 and 60% annualized growth over the next 5 years, I don't know. Maybe that's low, maybe that's high. But when you have a company that's inherently growing this fast, there's going to be a wide range of possibilities. So you can see you have a highly profitable business growing super fast. I put a wide range of multiples. What could be the earnings multiple a few years out, and from 20 times to 35 times, and 30 billion to 205 billion dollars, which is pretty incredible just because on an annualized basis, their sales is only 1.3 billion dollars right now. And yet we're penciling out, if they want to optimize their margins, I'm not saying they're going to have these margins because I believe they'll keep reinvesting in the business, but their inherent profitability, could suggest that they'd be after tax billions of dollars in profit just 5 years out, which is incredible. So let's view the other segment, which is the seller segment. You can see it's about 2.9 billion annualized as of the second quarter. Much lower operating margins, just because most of that revenue is from the transactions where, there's a 3% cost that the merchants have to pay for using a credit card, but 2% goes back to the interchange fees. So you think the banks and the Visa or MasterCard that help enable that credit card. So Square's cut's only about 1%. So their gross margins in this segment are only 40% plus. It could go higher because they are offering higher value services like the software. So I, once again, put a wide range, 10 to 20% operating margin, slap a 20% tax rate. What's the annualized growth in the years ahead? I'm, once again, 10 to 20%. Maybe this is low. They're down 16% in the second quarter of 2020, but you've got a pandemic going on. 80% of their business is offline. Is it possible it picks up significantly in the years ahead? Once again, throwing a wide range of valuations, 15 to 20 times earnings. And you can see that, first of all, it's interesting. The Cash App, that's really the option here. I mean, the high side on the Cash App was $200 billion valuation versus the high here of $20 billion. So really, the Cash App is the thing to get excited about. You know, they're still going to crush it in the seller ecosystem, it looks like. So you see a combined valuation of like $36 billion to $230 billion versus a current market cap of around $74 billion. This is a little different than you'll see if you're checking, you know, your Yahoo Finance, because I'm using the fully diluted share count, which assumes all those converts that they've issued, they have convertible debt, meaning debt that can convert into stock. I'm assuming it fully converts, throwing in a little bit of margin there as well for additional stocks and stock options. So, you know, you effectively have 4-to-1 based on the scenario that I highlighted here, where you have like 200% upside, 50% downside at around $153 a share. This is really interesting, unrivaled value proposition. And once again, I will share my sheet so that way so that way you can check out your own valuation assumptions, what you think they can do in the years ahead. If you enjoyed watching this video and you want to learn more about what I'm buying or selling in any given month, once again, go to unrivaledinvesting.com, click on Journey, so that way maybe we can both find the next square together. Thank you so much for watching. Hit that subscribe, hit that like button.